Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and a happy new year from myself and also from ECNTRADE. Viewing the Australian dollar in the last few days in 2021, we've seen potentially a modest climb, however with some divergence seen to the bear case, and along with that the 60-day moving average still containing the bulls around 72, 75, 90 could eventually see the market back away and look back towards immediate support of 72.25 and reassess from there. It is assessed though that a break beneath that level would see the next outcome to a potential challenge of 71.60. While this level still remains intact, and as you can see over the past, back in November, the market was rejected from the challenge and fell heavily into a downtrend. And then from the recent gains back in October, the bull trend was established. But before that, we can see in September that the stab reaction gave us a bear phase. So this is, to me, a rather important level, so do keep an eye on it in case we see a strong rejection from there. Looking at the euro, well, the greenback lost its footing on Friday as the final session in 2021 saw the euro stage a somewhat modest rise, but still contained by the level of 114.5. It should be noted that the RSI has staged two rebounds off that midway point, so do keep an eye on the third one that's coming through, as a break may actually trigger a further downslide to 113.35 to 112.70. It is anticipated it might be a slightly choppy week, as we do have a couple of US economic data releases. That is the FOMC minutes and the monthly December US jobs report, which is the non-farm payrolls. It is assessed from the forecast that 410,000 jobs may be added in December, with the previous print disappointing of 210,000, and the unemployment rate is expected to slip from 4.2 to 4.1. Nevertheless, while the cap holds, that is around 114, figure 5, then I do feel the bears will have the upper hand and eventually take the market lower. Well, unfortunately, the bulls have the upper hand for dollar yen as we see the market climb further into the fourth consecutive day, as the ADX is now getting somewhat overheated like it did back here in October, and when it got close to 60, which is nearer where we are now, did revert to the trend. Looking at the technical pattern, I do feel that we may get a rejection from 115.65 and eventually look back towards the support of 114.80 to 114.30. The sterling case reached and rejected its target of 135.30. It is assessed, though, from a technical point, we're still bullish and the bulls still have the upper hand. So don't, at this point, turn your eyes off this level, as we could see a break and look up towards 135.90. CAD yen, since breaking the trend, is heading higher and pretty hard to put a topside target considering where we're currently placed. But we are overbought, so let's see how strong this rally can. That is from a weaker yen and a firmer CAD. Gold has broken above that level of 1,815 and presently holds on track or challenge to the level of 1,836 to 42. To some surprise, gold got its mojo back on Friday, and from the last two trading days, it's clearly broken through this level. Let's see how it plays, though, as it gets closer towards that top side of 1,836 to 42, as mentioned, because we could see a rejection, because from that level was a heavy candle, and that was posted late November. Still, the bulls do have the upper hand, so let's see if the market can climb, or a close under 1,815 would give us some indication that that break to the upside was a false break, and then eventually could see the 1,788 level taken out. Well, after 4 attempts to the top side, the resistance at $76.50 for West Texas oil is held and respected. However, not quite out of there yet because the midway point is holding. But if we see a continuation in this pattern, then we could see the market slip back towards $74.30 and reassess from there. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day and a great start to the new year.